Hi everyone, this is David Gellner and Parker Ksidakis with the Gellner Team of Kidder Mathews. We're here today going to give a August update for retail investment sales as we kind of wrap up Q3. Parker, you want to kick us off on what we saw in August as far as sales?
Definitely. So in August, we saw 9 multi-tenant sales, 5 single-tenant sales, a little bit down from July on a total sales number. There was 15 single-tenant sales in July and 5 multi-tenant sales. So multi-tenant over the last couple of months remained relatively consistent, but definitely saw a little bit of a single-tenant sale slump in August, partially probably just due to what we'll talk about later with interest rates and just summertime, but overall, multi-tenant consistent, single tenant had a noticeable drop off.
Totally. And, one thing that we are starting to see an uptick in as far as heading towards the end of the year is we are getting almost daily calls from inbound potential 1031 exchange buyers. A lot of that seems on the multifamily side. The unique part of that, which differs from what we've typically seen historically, is with those apartment groups in upcoming 1031 exchanges, they are starting to more and more of them focus on multi-tenant investment. That's historically been predominantly on the single tenant side as, kind of a final purchase in their investment life on the passive, totally triple net side. However, the general feedback that we keep hearing is because of the regulatory burden that seems to be getting more and more of owning multifamily in the state of Washington, combined with operating expenses continuing to go up while rents stagnate in the multifamily side, a lot of groups again and again are starting to say, hey, the triple net lease structure that is common in retail is very enticing and attractive at this current time. So we're seeing a ton of demand still, historically strong demand, frankly, on the multi-tenant side. Looking towards, a couple other topics to talk about: interest rates, the Fed's meeting in September. Expectations as of today are a 25 to 50 basis point on the high end decrease in the interest rates. Right now, some of the quotes we've seen for retail, assuming strong borrower quality of asset, we're seeing rates anywhere from 5.75 to 6% for 5-year money. So interest rates are not as bad as they were certainly a year ago, and it seems like still quite a bit of liquidity on the lender side looking to place into retail. I still believe, it's retail's time to shine. Lenders, not only lenders, but the buyer pool, future buyer pool, are all very favorable towards retail this year and last year as well. You want to talk about some of the news we saw come out recently?
Definitely, yeah. Fred Meyer, it's been a big news story, but they're going to be closing 6 stores in Western Washington. So Everett, Kent East Hill, the Lake City store, Tacoma, Redmond, Fred Meyer, and then the QFC as well in Mill Creek. So, overall, something to watch out for if you do have, a center that's either in one of those markets, or particularly if you're shadow anchored by one of those stores, just something to keep tabs on, because those are going to be, from a driving grocery anchored force to vacant, and a huge box being vacant will definitely change the market dynamics in those submarkets.
Yeah, I would just add that some of those hopefully will be, backfilled by future grocers. We'll see on that. I think a couple, especially the Redmond, Lake City locations down the road, could definitely be kind of a mixed use vertical development play. Overall, if you haven't heard the news, the feedback from Kroger has been why they're closing those stores is store theft, and then just the regulatory burden in the state. So quite the bummer in the Puget Sound. I mean, very rare to see Fred Meyer ever close any locations, given how difficult it is for a grocer of that size to find new locations in Washington state especially. 2 things just to mention. We've mentioned them in prior reports, but through our conversations, it seems like quite a few groups are unaware of item number 1 that recently was changed 2 months ago, which is the estate tax in Washington state. If you're not aware of that, highly recommend you speak with your CPA, reach out to us. We have a couple good articles on breaking it down, but those rates for the estate tax change significantly, starting at $3 million of net and above of net estate proceeds. So definitely something to be aware of. The other item on a more positive note, bonus depreciation is back to 100% year one. We're hearing from a ton of groups who that has really incentivized them to buy this year, especially groups that have some income tax burdens that they'd like to buy some commercial real estate to help out with. So if that may be yourself or you know of someone, please have them reach out. We have a handful of great opportunities that could really help on the bonus depreciation standpoint with taxes. Once again, if you have any questions about any of this or specific questions on what we're seeing in the real estate market, please call Parker and I or give us an email anytime. We're here to help serve your investment needs any way we can. Thanks.